So, David, let's start with Apple, which is higher right now, but we know, of course, it has been a rough stretch for the iPhone maker, closing yesterday below its 200-day moving average for the first time in more than a year, on pace here for its worst week since late February. If there's a rotation out of tech, then Apple is going to get hit. Also, though, some investors do question whether the company can really sustain the tremendous momentum it's seeing. Bulls like Gene Munster of Loop Ventures counter that Apple is a buy, though. There's a big pool of iPhone fans, he says, that will continue upgrading, especially as the 5G rollout continues. And Munster bets that Mac and iPad will continue showing strong growth in the quarters ahead. Another area to watch, the semis, with the SMH also higher in early trading here, but on pace for its worst week since March of last year. Bernstein's Stacy Rasgon says the pressure is not that surprising. Valuations became stretched after remarkable runs, and during the earnings season, there was a lot of hot talk about continued shortages and supply constraints. Having said that, Stacy remains a believer in the companies that make the equipment used to manufacture chips. Applied Materials and Lam Research, he says, are buys. Finally, take a look at the Hero. That's the ETF that tracks the video game industry, trying to avoid its 11th day of losses in the last 13 sessions. Zynga, Take-Two, Activision, EA, all now underperforming the market over the past 12 months. But Andrew Urquhart over at Jefferies bets that these game makers will keep growing on the back of strong content and solid pipelines. And valuations, he says, now look very reasonable. Andrew is a fan of Zynga, Activision, and EA.
Shepard Smith here. Thanks for watching CNBC on YouTube.